Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got a killer episode in store for us. We've got a lot going on in markets, a lot of volatility, a lot of fear, and in this episode, me and Nalab, co-founder of MRKT AI, are going to show you guys some market setups, how you could use market to gain an edge, and possibly where markets are headed next. So guys, smash that like button if you're ready to make some money, because Market in the Morning starts right now. Yo, Nalab, good morning, man. Happy Tuesday.
Happy Tuesday, Kevin. Good morning. How's it going?
Dude, I'm doing good, bro. How are you?
I'm doing good, man. I'm doing good. It's been a good start to the week. We have a lot to go over, like always. I think one thing about the markets is that it's always changing. There's something new on the table every single morning. You wake up, you're like, what the hell happened across the world overnight? Let me find out real quick. So it's, it keeps the brain sharp, keeps me active, and it's another day, another dollar.
That's right. That's right. And with market, it's just that more consistent to know, okay, another day, another dollar. I know this market's setting up in my favor. We're going to look for that continuation.
Yeah, the confidence, right?
That's right.
There's
That's
that
right.
clarity, that conviction is a major thing to have. It's you have to put your money where your mouth is. And you can only do that if you have conviction, if you know what you're doing. But let's get into it, man. I'm excited for this week. Excited because we also have an exclusive webinar coming up on why your setups keep failing during news events. And Jeev, myself, and one of our new market team members, Imri, who is an institutional trader who's managed billions of dollars, is going to be coming, and we're going to also be breaking things down for you. We're going to show you how you can still make money while trading these geopolitical markets, while trading data releases, and anything else that comes into focus on the macro and geopolitical stage. So before you can just go and check this out, secure your spots, sign up, and this webinar will be on March 22nd. Now let's jump into it. A lot happened overnight. We've seen gold, we've seen oil. We'll go over oil, we'll go over US equities, we'll go over dollar. We'll touch all the bases, right? So, but what major things that have happened overnight is, again, just the back and forth that we're seeing between the US government, Iran, Israel. It's very still ongoing, right? If I look at gold over here, we can see that what supports this bullish bias on intraday for gold is ongoing Iran-US conflict tensions. And you are now looking at the newest feature that's been added to market. And I've zoomed in a little bit just to show you guys. But as breaking news headlines comes in, we match them exactly to the supporting factor that's currently happening. So if something could change, you'll see the headlines being matched up to here. Excuse me, Kevin.
Bless you.
Thank you. So in case we got some headlines that talked about a Fed hawk and inflation risk, let's say tomorrow, if that was the case, then you would see those headlines over here. So now what our users can do is, because there are so many headlines, especially high impact headlines, you want to see whether or not these are impacting which factor on the bias it actually impacts. So if it's going against your bias and you see 10, 15 headlines come with something with like the rising 10-year yields, then you'll know okay, this is potentially going against me. You can also click show lines and it'll show you all the ones that relate directly to this conflict, as well as just zooming in on the charts or looking at the bigger picture chart and just seeing where exactly these headlines came out. But aside from all that, we'd love to hear your feedback. This is just the first iteration of it. We have more coming this week, which I think you guys are going to love. Lots of big engineering and product updates we have coming out, and very, very excited. Kevin's seen a few of them, and I know he's been using them behind the scenes. So let's
Very
let's
cool.
let's jump into something I really want to talk about is oil.
Yeah.
Oil
Huge.
surged all the way to 120. Oil futures surged to
Right.
$120 a barrel. Like this is a monstrous moves. These are
Yep.
moves like it went past Russia Ukraine, right? Russia Ukraine highs.
Yeah. Oh
Right.
yeah.
Yeah, right here. Or where was it? Yeah. When Russia Ukraine was happening, it went past those highs. This is insane. Insane movements in the oil market, but we quickly saw a correction of it. And I want to break this down because this is what's the best. One of my favorite things about market is when I open up, let's say I go to backtest fundamentals or anything like that, right? And I want to see exactly what is going to happen, what happened in the biggest candles, and that's where our eyes usually go. Is if I'm on oil right now, your eyes usually go to this big massive gap. It goes to this candle. It goes to this large bearish candle. It goes to this large bearish candle, and you're like, okay, what caused this? Right? What is causing these massive movements when 80% of the time the market is barely moving? So there has to be some sort of catalyst that causes this. And I can click this and you can see the exact analysis behind what caused this price movement at 1 a.m. Eastern on March 9th. Right. So G7 emergency oil reserve release announcement triggered sharp profit taking reversals. Oil had surged 28% from Friday's close, which is, guys, these are massive movements. And these are
Yeah.
movements purely driven by these geopolitical tension. And that's primarily the reason why your setups are failing right now, is because of your lack of understanding, but also because 90% of traders don't understand these are ongoing developments that are continuously having different impacts on the market. Over here are more tensions. As you can see, Iran named new supreme leader amid US Israel war, supply fears, ongoing US Israeli war with Iran escalates supply disruption risks, right? Strait of Hormuz, traffic halted, cutting off 20% of global oil flows. Massive tensions that brought inflows into oil futures. Now, on the opposite side, you have relief. You have more profit taking happening. You have de escalation for those oil disruptions. So, what are you going to have? You're going to have an opposite impact in the markets. You're going to see institutions profit taking, those who have been riding oil from $50 a barrel, $60 a barrel, $70 a barrel, and really stacking their positions leading into the war. Because this war isn't something that just randomly happened. If if you're a market user, I want you to go to the headlines and just type in Iran, and you can go for days. And I'm talking about 3 months ago, 2 months ago. These
Yep.
were tensions that were developing. These aren't something new. We're just 21 hours ago, and we've scrolled through like hundreds of headlines already. So now imagine these are ongoing tension. So these institutions have been pooling in and building their position because they knew this was inevitable. War is inevitable. Human nature doesn't change. 2 decades later, the US is more war hungry than ever. They're going to go to war. This is just human nature. From dawn of time, civilizations have always waged war against each other for resources, for power, to gain more control in their region. This is just history repeats itself, right? So, but what we can take advantage of as day traders and people as market participants is understanding what's going to happen. Trump did say yesterday, and I'm going to have to find this headline, but let's quickly have a look. Trump said that the war on Iran is basically done. And
Yeah.
that's also a big reason why we saw a correction on oil as well. However, if you think the war is going to be that easy to win or finish, You're wrong, my friend. I don't, because a few hours later, Trump said the war will be done when I say it's done.
Bro.
Right? Like, what do you mean, buddy? Like, what's going on over here? So, in my opinion, I think this move on oil is going to get faded out. Like, we're going to see buyers jump back in. You're probably going to see, and we're already seeing that in the intraday timeframes, where you're seeing more higher lows being printed. Right? You can see the sellers that drove this play down from the de-escalation, from Trump mentioning that the war is almost done, are eventually going to get faded out, because then you also start seeing headlines that come in like this. It's possible he could talk to Iran, and then Trump also saying the war will finish when I say it's done.
Right.
Them saying they're ready for another strike. Right? Does that look like full de-escalation? It doesn't. Right? Who knows? Maybe down the line there's going to be troops on the ground. Right? God forbid. But these are things that can happen, and these are all the scenarios that you want to position yourself for. So imagine if you were to look for these types of buy, you're like, okay, you know what? I'm calling this a Trump bluff, right? It's like kind of like the taco trade, where Trump would say 150% tariffs on China, and then 2 days later roll those back to 15%. That's a taco. This is the same thing. Trump saying war is done, and then few hours later, in Asian market hours on Tuesday, Trump saying, "Hey, we're ready for another strike. The war will be done when I say it's done." These aren't de-escalating words, right? This is back and forth. But the market is very hypersensitive. That's why we can see massive gaps towards the upside, as well as outflows like this, because of how hypersensitive the markets have become. And this is good. Like, you want to be trading markets that are easy to understand, and also volatility is flowing in a clear cut direction. So when you see massive moves like this, doesn't necessarily mean that buyers are just dissipating out of the market. It just means we're repositioning. What we just saw was a very parabolic move on oil. This wasn't a normal move. Just March 5th, we were at $78 a barrel. We did a 50% move towards the upside, nearly 50% move, 50% move, sorry, from 80 to 120, right? So there's going to be the correction, and I always say this: is the correction is going to be just as aggressive, if not more, than the push towards the upside. And you see this countless throughout global markets. You see this on gold. This massive play that we had towards the upside from January 5th to January 29th, you got a more aggressive play towards the downside in just a matter of 3 days. What it took 3 weeks got wiped out in 3 days. Same thing here. Massive play towards the upside. Gold corrects in a single daily candle. This is what the market does. This is market mechanics. When something like this happens, the downside is going to get faded out with just quick de-escalation. That's exactly what happened. Just in a matter of 2 sessions, we corrected again another 50% on oil, and now we're seeing more of intraday price action. So if you see price action, something like this is your telltale sign that oil is likely going to set up for another round of rallies, right? Any thoughts on that, Kevin?
Yeah, so I'm with you on that, right? Trump came out yesterday and he was like, "Oh, the war seems like it's coming to an end soon," and Iran responded immediately with like, "It's not. We're not done yet. We're not just going to give up whatever." And then he also made some comments on how the U.S. should be in control of the Strait of Hormuz, which is also massive, seeing that China gets 15% of their oil from there. They hold 20% of the oil supply, and that's also one of the main drivers of the bull move, right, is a supply issue. So if without this war de-escalating, like in full, legitly, without just a Trump headline, we're not going to see things stay lower. So I'm fully with you on that. I think oil is going to go back above $100. And the issue also then becomes, guys, and a lot of people aren't aware of this, when oil prices remain high, it really puts pressure on inflation. So if we stay above $100 on oil, we're going to see inflation levels in the US, at least, levels that we haven't seen since the COVID era. So with that being said, this isn't just about, oh, is oil above 100 or not? It's about how is it impacting the market going forward. And speaking of inflation, guys, we got CPI tomorrow at 8:30.
Tomorrow.
That's right.
So we have CPI, massive data release tomorrow. Year-over-year reading is the one that is the market reacts to the most, right? This is called the headline reading. So markets are anticipating a 2.4%, same as prior, and then the ranges are 2.3. But you can see the range on the upside is actually 0.2% higher. Usually it's give or take 0.1% higher. And then that could be tying back to what Kevin's saying, that there's a higher risk of an upside, right?
Yep.
So even if we come out at 2.6, although it's 0.2% higher than prior, it's still within the maximum range. So yes, there will be impact, but it might still be subdued, right? And now we can see that even rate decision probabilities have taken more of a backseat to what's currently going on. Even with last week's labor market data that me and Kevin broke down on Market in the Morning, we got a 2% increase in rate cut probabilities. That's barely anything. Markets were so hypersensitive just a few months ago, and that's the entire beauty of the financial markets. They're always changing the main focus, but the main focus always exists. There's always an underlying theme on what's currently happening in the markets, how are investors behaving with this certain catalyst and event. And if you can fully understand that, that's where you start operating with your third eye, where you can really see the market for what it is, for a pure just millions of transactions happening based on information that one can perceive. And if you have tools that can help you perceive this information, you are going to operate with clarity, with consistency, and with full conviction in the market. So just coming back to this, 14 hours ago, 83% drop in Iranian drone launches. Trump saying we are close to finishing. Okay. We're also waiving certain oil-related sanctions. U.S. Navy will escort ships in Strait of Hormuz when the time comes. Waiving sanctions, it's going to be ended soon, right? And then he starts backtracking. We're going to go further on Iran within the same hour. Guys, this is the time difference between these headlines is 3 minutes, by the way. It's within the same hour. So you can see he walks back and forth on these things.
Did you see just recently, 7 minutes ago, Hegseth came on talking about Iran, and Iran's secretary also made a response 5 minutes ago too. We got Hegseth: if Iran does anything to stop flow of oil within Strait of Hormuz, they will be hit harder than ever. Trump also mentioned that yesterday, right? That they're going to get hit. Did you see he tweeted? He's like, if the Strait of Hormuz gets shut down, we're going to hit Iran 20 times harder than they were originally hit.
Yeah. They're going to do it. I think there's going to be another round of strikes. I think this
absolutely.
And excuse me, I wanted to just take it back because what Kevin said is a great point. I want to take it back to right over here. I know this at like the back of my hand, man.
Yeah.
So this was the initial Russia-Ukraine impact on gold. And I'm just talking about gold in this case, where the buildup was happening. The volatility was kicking in because Russia was assembling near the Ukrainian border. But on February 24th is exactly when Putin invaded. And we saw a massive spike towards the upside and then correction. And then came in the following weeks, another massive play towards the upside before it got priced in. So that even in that case, in that war, we saw two phases of it. Okay. So keep that in mind, is that something like that could easily happen if there were headlines that came out, okay, oil disruptions, they're bombing Iran again. You're going to see oil inch its way back up to here and start that, maybe even hit $150 a barrel.
Like, that would be insane.
That would be insane, but it is not out of question. That's something we shouldn't rule out. Just because it's so far away doesn't matter. If things escalate, and we know how human nature plays out, when you have greedy, corrupt men playing chess on the highest level possible with human lives as pawns, you're going to get massive flows of money repositioning in global markets, because people aren't going to want to keep their money in US equities, right? And right now I'm talking about people with billions of dollars who need to protect their capital. If you're an investor, you should still be using these as more dip buying opportunities. I still believe in that, because although we're correcting, if you're investing for the long term, it doesn't matter if you buy here, if you're buying a bit of S&P over here or buying into some US stocks, you can still gain that. But I also think, on the other hand, this push up that we got on ES will likely get faded out.
Yeah.
So we'll see if tensions continue, right? Of course, that's always the given thing, is that if this current market sentiment and narrative continues to hold weight, right? If it continues to hold weight with Middle Eastern tensions, oil surging past, Fed rate cut odds being collapsed, right? And now seeing more of like, there's been a bit more headlines of certain Fed members talking about hikes, right? So it's a bit of both, but you can see that currently there are way more things supporting the bearish bias on ES than there are on the bullish bias.
Yep. A lot going on right now, guys. And you know what? Now is a great time. I'm going to share my screen for a sec with market. Now is a great time to use market and really, really use it for that high impact headlines, right? Now, sometimes high impact headlines come out very often, right? If it's something important, something that could affect the economy, it's going to come out. But at this point, because there's such a escalation, there's such a strong tension so thick you could cut it in the air. Markets are going to move off these headlines, not so much the Iran security chief headlines, but maybe Trump saying, like yesterday, for example, that we are looking to end the war soon. Markets sold off on that for oil, right? And they also moved higher on the S&P yesterday off of that same information. But just like Nalad was mentioning, and I completely agree, I don't think this is over anytime soon. I think this is just getting started. And this dip right here, as much as it probably wasn't, we'll just throw the air quotes out there, could have just been a bit of a manipulation before that next leg higher, right? Trump sort of reaching out to all of his friends, all these investors.
Exactly.
Yup.
Exactly.
Hey,
you know, the boys group chat being like, hey guys, watch out, take some profit on your oil positions.
Yep.
I'm going to take profit. Look what I'm about to cause. And then boom, within the same 2 hours, he's like, hey guys, load up again.
Go up. Yep.
Load up again, boys.
Yep. And not for nothing too, guys, but when we had this massive pump, we attacked Iran, things got really strong, and we moved 30% in a single week on oil. What happens there too is, again, from an investor standpoint, from hedge fund standpoint, those shorts are squeezed. They're forced to cover their shorts in billions and billions and billions of dollars worth. So again, could this be just that last leg, that pullback for all these big investors to get out, or even possibly flip that position and go
repositioning?
long?
Yeah,
exactly.
If we get that, and I think oil above like 91.5, we're going to start seeing that structure continue, this 91 area, and we're going to see oil and markets directional bias turn to more bullish, as well as we continue to, even like 32 minutes ago, Kevin, if you scroll, Hex said that today will be the most intense day of strikes. Just 35 minutes ago, you'll see a headline.
Let's see, here we go.
Hex said today will be the most intense day of strikes.
Oh man!
I've seen Iran fire lowest number of missiles in 24 hours. Right, and then U.S. military striking Iranian mine-laying vessels. Like, these are just more escalations that are happening today.
Yep.
So yeah, this is something that you have to pay attention to. It's not something that you can just neglect. Come to the charts every morning, look for your open range breakout. That's not happening, guys. Like that. This is why your setups keep failing. Your new setups, if your setups fail during times like this, because you're not adapting to the markets. And I think that's what 90% of retail traders have a problem with, is the adaptation. Markets are not one-dimensional. They're multi-dimensional environment that operates based on the latest and best information that's available.
Yep, absolutely. And guys, use those brain icons on a headline. Today will be the most intense day of strikes. That's very helpful, right? That gives us some insight into a bullish oil. But if you break it down, you want to know more about it. This is also why it's so important. It's not just important from a day trader aspect, but it's important from an umbrella of market structure. And that's why it's beyond important, way more important than any ICT concept or anything like that. This is the movement of markets right here. Institutions, they don't trade ICT concepts. They trade off these headlines. They trade off the geopolitical, the economic, the data feeds that we get, the economic calendar, everything.
Yeah, exactly.
This drives, look at this. This drives oil prices to $100 a barrel, spiking inflation risks to potentially 3%. We were just talking about that earlier, guys. higher oil. We got CPI tomorrow.
And that's also partially the reason we have that higher range on CPI towards the upside, right? Like that
Exactly.
upside risk.
Exactly. We got tons coming in here, guys. A lot coming in and a lot of volatility. If we looked at something like the VIX, show you right now, VIX, guys. If you trade US equities, the VIX is going to be your best friend. VIX was all the way up at $35. This is a massive move. Now, historically, here's a fact for you guys. When the VIX is above 30, 90% of the time within 12 months, the S&P is higher than that point. So from a long-term investor standpoint, VIX is above 30. People are worrying. That's the best time to buy.
Exactly. It is the best and greatest time to buy. We mentioned it last time. When others are fearful, be more greedy.
Yep.
And the opposite as well. Right.
Exactly.
There's plenty of great opportunities in like US stock markets right now as well. If there's companies you believe in, 100% you should continue investing in those, pooling your money. The best advice I can give is you're day trading consistently. You should take that money and move it into long-term investments like US equities. That's going to be your best friend. You should pool it in a handful of stocks that you believe in, that trust in, that you know are going to be here through the test of time, right? So that's always great. Kevin, is there any stocks that you look at personally?
You know, I was looking at Microsoft right now.
Microsoft is a great buy as well. You know, absolutely. Microsoft isn't going anywhere, and the upside on Microsoft right now is about north of 40%.
Yeah, real close. Yeah. We're getting there.
Microsoft. Robinhood is another great one. Robinhood upside right now is about 80%.
Yeah, that's much nicer.
95. Yeah. That's and then if you look at MSTR, MicroStrategy as well. MicroStrategy just has it's been correlated to Bitcoin. So if you overlay Bitcoin on it, you can see that it's completely correlated due to MicroStrategy being one of the largest corporate holders of Bitcoin.
That's right.
So on Bitcoin's upside, you're looking at about 130%, which is quite a lot. Right? Or was it 80%? Sorry.
80. Yeah, we're looking at 80 at the moment.
80%. On MicroStrategy's upside, you're looking at somewhere between 250 and 360%.
Yeah.
So now you have to think about, okay, if this is an asset that follows the underlying asset of Bitcoin perfectly, I have a greater opportunity in a play like this.
Yep, exactly.
Right? Because when BTC starts moving, this is going to start chugging just as much, and it's going to fill these ranges. So if you're not in BTC, this is another play that you could potentially be in due to MicroStrategy being one of the largest corporate holders. They have about, I think, 670,000 Bitcoin, which equates to about $60 billion.
Yeah, they're going to be the new 2008 company that gets shut down.
Yeah.
No, but if Bitcoin, if Bitcoin does manage to find some footing and make higher, again, almost like Nalab was mentioning with companies that we trust, right? MSTR, not a company I personally trust.
I wouldn't trust it, but it's a volatility play for me.
Exactly.
It's a play purely based on Bitcoin's.
Exactly.
If you expect Bitcoin to go back up to all-time highs, which I do think it will go.
Yep.
MicroStrategy, it maybe doesn't go to all-time highs, but imagine MicroStrategy, you buy at 140, 130s, and now you're riding it up to 350s.
Even 450s.
Yeah, 450s. You know? It's going to get to some of these ranges, and this is because it's purely a Bitcoin play. I don't trust Michael Saylor. I don't trust MicroStrategy as a company, but it's purely a play in that term.
Yep, exactly.
As well as if you look at Netflix.
Oh, yeah.
Netflix has had massive upside recently, but I got into some Netflix buys around 77s.
Beautiful. Yeah, that's funny. I was covering Netflix. I loved it. Anywhere below, I even think $100.
Even below 80s as well. 80s, low 80s. I had 84 Netflix buys, 77s, 81s.
Nice, beautiful. Yeah, guys, Netflix is another great one. Netflix isn't going anywhere soon.
Netflix ain't going anywhere, guys.
Right. Now, it's funny, though. They had to sell the news event, right? Now, they announced that they were going to try to purchase Warner Bros. So everybody thought, we're going to go bullish. Instead, Netflix sold off at that point about 30%. Now, that wasn't just 30%. That was 43%, 44% from its all-time highs. That is a great discount to buy the stock at. Because
Yeah,
when you look at a 44% move to the downside, it's always going to require a larger move back to the upside. So 44% to the downside, that would equal 76% to the upside right there. Massive return.
massive plays. Yeah, great opportunities in the markets. You know, like markets aren't always going to move one directional. They need to, the market participants need to be repositioned. They need to profit take, re-enter, move their money around, hedge their positions. It's more complex than just placing a buy or sell because you see some sort of gap in the market.
Exactly.
It's way more complex than that. So you have to keep that in mind. And that's the best thing, is that we're here to break it down. Market's here to help. And as you can see, like even here, I went to Kevin. You mind just pushing?
Yeah.
There we go. So I went to backtest fundamentals on market, and I clicked one of the gaps on Netflix, and you can see Senator Warren criticizes proposed Netflix Warner Bros. As an anti-monopoly nightmare. Netflix opened higher but reversed amid media sector M&A scrutiny. So everything is just broken down. Even for Netflix, you can go into any stock, find out what happened, massive moves, or anything. And another one actually is Tesla. I don't know if you like Tesla, but
it's a give or take.
I don't think you can Tesla.
No.
Tesla is going to go $600 a stock, and it's going to happen sooner than later. When Tesla does rally, you see those types of massive plays within days. Like from down here, 218 to 365, this was 2 weeks. About 3-4 weeks. So that sort of play can happen instantly, given that there's less tensions in the world and more focus on back into growth stocks as well, right?
Yep, exactly. No, Netflix did not end up acquiring HBO. So they backed out of the deal, and it seems like Paramount is the only one really making a running for that deal right now for HBO Max. What is it? Paramount, they're going to do Warner Bros. Discovery. That's all within that same group.
Yeah. I think Netflix is going a different route where they're just like, hey, we don't need to acquire these studios. We can just continue pouring more money into our infrastructure and resources. And because you got to think about where Netflix came from. Like these guys were shipping out DVDs at first. That's what the Netflix subscription was that you'd sign up, you could request a DVD, you'd get it, and then it went to streaming. Like they were basically a mobile blockbuster at first. So Netflix evolution, now they've become one of the behemoths in media, where most movies come out on Netflix. Who goes to the movie theaters? You rarely go, right? You go once in a while. So Netflix isn't going anywhere. Long term, it's still a great play. Every time Netflix increases their subscriptions, users are like, cool, I'll pay it. So it's a great product. People are loyal. Their lifetime average value of a user is definitely within a decade, 8 years to a decade. So that tells you that the strength of the company and that it's a long-lasting company.
Exactly. Yeah, it looks good.
One thing I want to mention, sorry, just to go back into some analysis. Gold rejected 5,000 price point earlier this week when the markets opened, right? Which set up for some very clean buys. And given that market's bias on gold is still bullish, if we break above this target level of 5,200, then we can continue to see this part of the move get corrected. And we can see something take place like this, given the tensions continue to elevate or remain elevated. And then you can pay attention to the news feed and see if there's any high impact events, such as, oh, this will be the worst day of strikes for Iran. You see something like that, you know that the bias over here on gold is going to hold weight, right? I opened this up and I can see another objective is to destroy Iran's navy. Come on, guys. Does this look like the war's over? These guys are just playing. This is all theatrics. Everything you hear, you need to take into account and use your brain. The brain that God gave us, we got to use it and be like, hey, are they telling us the truth or are they trying to deceive us? The majority of the time, it is a deceptive play. But us being smart, we're able to connect the dots. We're like, oh, ongoing crisis. This guy said that war is done. But then I saw 15 headlines saying that they're sending more. They heard more booms. There's more missiles. They want to destroy the Navy. They're always developing. And that's the beauty here. It's that it keeps you sharp, keeps you on your toes. I personally, Kevin, never want to leave my desk. It is, I love being behind it. I love watching the markets. I love staying up to date. And
Yep.
I think that's the best thing as a day trader is you can just do it from the comfort of your home.
Yeah, no, I'm with that 100%, man. 100%. Real quick, I want to touch on Tesla. One last comment I'll say on it. Tesla's not even an automotive company
It's
anymore,
not
right? Obviously they do, but they're really gearing away from that. AI, even robotics, the US is the
robotics.
most is really backed in the robotics section, right? China's got all these crazy robots they're making. US is sort of lacking. So can Tesla, being the huge company that it is, and with the mass amount of cash that they have, step foot in robotics, which they already have with some of their what's their Tesla bot called? Is it just a Tesla bot?
I'm actually, yeah, I think so. Tesla bot.
It's real creative. But they're the only ones doing it. Microsoft's not making a Microsoft bot.
Yep. And like full autonomous self-driving fleets. Like
Yep.
that's what they're going towards, right? It's once that really comes into play and it's all integrated around the world, do you think Tesla is going to be worth $300-400 a stock? Tesla is going to be north of 580s, 600. Tesla could get to 700. I am an avid buyer from 230s. From
Nice.
230s, and I'm still holding these positions. I've stacked more along the way at 274, 290s, 300s, and I'm just ready for this to rocket. So I completely agree with you. I don't view Tesla as a car company. I view it purely as a tech play. And once that comes into play, you can see these moves are monstrous. These moves are like you went from 330 to 470 within 3 days.
Yeah, talk about volatility. Tesla has some of the most volatility and some of the most volatile moves we see.
Yeah. Yep. Exactly. So
coming off great support at 380 right now.
Sorry?
Coming off great support on Tesla around 380.
At 380. This is a great buying area. Plus, I would love for a dip to buy lower as well. Like this is something I really do stack up on just because of the fact that I know this is going to hold through the test of time. Warren Buffett said something great. He's like, I will never bet on Elon Musk and I will never bet against Elon Musk either. He's like, I'd rather just stay out because of how volatile he is as a figure, plus how volatile the stock is as well.
Remember when he stepped foot in government for a few months there?
Yeah, exactly. Like that's exactly what caused like this feud.
Tesla hated it.
You know, Tesla people hated that. Like, let's go to that right now. So that was in June, right? So if we go back to we'll go back to March. Cool.
Trump and Elon's Doge group.
So you can see that drop. Let's even go back a little bit further just so we can see the full picture. So now we've selected the entire downfall of Tesla that led to 220s over here. This was the trade wars being priced into the market. 220s. I started buying over here. You can see June 5th, 5:30 to 9:30. This 4-hour candle, and then this one here. If I click this, we're going to start doing an analysis, right? And what this is going to show us is exactly what happened in this candle. Escalating public feud between Trump and Musk over spending bill. Musk criticizes bill for massive deficit increase and electric vehicle incentive cuts. Trump attacks Musk amid policy disagreement on tax cut legislation. And you can see like the big ugly bill will increase deficit to 2.5 trillion. If I click the next candle, you can get a breakdown of here as well on what exactly happened. But you can see that this wasn't entirely political move towards the downside, which caused over $100 loss on stock value. Basically, nearly 30% in a single day was lost. So it's Tesla is very volatile, and as Kevin says, in politics, when he stepped foot for those few months, look how much the market reacted to it. Market hates it.
Yeah. I wonder why they hated their CEO stepping into politics.
Yeah. And you know Trump's petty. You say anything against him, he will come back lashing.
Yep. Guys, a few headlines just to cover real quick. We mentioned them earlier. So here we go. 12 hours ago and another one from 12 hours ago. These are both Trump and Iran related. Trump, if Iran does anything that stops the flows of oil within the Strait of Hormuz, they will be hit by United States of America. And Iran saying that in response to Trump's original comments about the war looking like it's ending soon, they said, we are the ones who will determine the end of the war. Does that sound like it's ending anytime soon?
Yeah.
If both sides aren't agreeing that it's ending, we're clearly not going to be ending anytime soon.
It's not ending anytime soon.
No, not at all. Oil's going to make its way back higher again. Gold has really been in quite the range, though, really failing to find that strong
if gold, I think gold is going to make a break above 5,200, and we're going to see that slow chugging happen throughout the week.
Yeah.
Right? Maybe inflation data causes, if we get an increase in inflation towards the upside, we might see a slight correction on gold just to some better intraday prices, because we have seen about a 2,000 pip, $200 play on gold towards the upside from the weekly lows at 5,000. So this is still a pretty massive play that we've seen just happen over the past day and a half. So if we make our way above 5,200, give or take an intraday correction, we can 100% see gold continue to 52.59 that Kevin has marked out, and higher up into 5,300s.
Exactly. Yeah, I got the same areas, but we really need. I don't think it's going to happen today. I think with the
I think it's where we got a few things like we need more escalations to happen. We need inflation data released.
Yeah,
right? And this move might just be something that happens in the second half of the week, given that it's still early into the week, and we'll see how things develop on the war front.
Something to consider, seeing how much gold is impacted by inflation and seeing how oil prices are going to impact inflation as well. Watch that oil. If oil can break back above 100, holds above 100, that could give us some insight into CPI tomorrow or some inflation reports even next month. And we could see a possible, we've talked about it before, pricing in on gold, right? If oil stays high, it stays strong, that's going to impact inflation. Hedge funds know this. Institutions know this. And guess what? Now you guys know this because you're using Market or here at Market in the Morning and can take advantage of that. Is gold going to find momentum? If yes, then we know to go long, right? Because it's not a BS move. Then we know it has some backing to it.
Absolutely. Now gold is right at 5,200 now.
Yep.
On the CFD. But anyways, it's if we do get that break, we can get that clean one-sided volatility play for the session. But give or take, we'll get more pullbacks. Those pullbacks will just get bought up because the bias isn't changing. We're still seeing escalations, right? We're seeing refineries being hit, oil supply disruptions, escalating with sending more strikes. Like this isn't going away anytime soon.
No.
Right there, the worst case is the world just ends later this year. That's the absolute worst case. Hoping that doesn't happen. I would like to enjoy life a bit more than just the next few months. So, God forbid that everything gets resolved. But the chances are this isn't getting resolved anytime soon. So take advantage of it while you can. Take advantage of the market while you can. You never know when the world's ending. You don't want to regret not using an amazing piece of software that a very dedicated team is building. But anything else you want to talk about, Kevin?
I wanted to quickly just look at the CPI chart here, seeing that we are getting it tomorrow. Guys, make sure you hit that like and subscribe button because we will be covering CPI for a special edition of Market in the Morning tomorrow. So make sure you're here at 8:20. The news comes out at 8:30. We'll check it. We'll see how it comes out. I'm thinking it's going to be higher than expected. We just had unemployment rate. Now, unemployment was starting to try to tick lower the past couple months, went from highs of 4.6, 4.4 in January, 4.3 in February, back to 4.4 in March. So we're seeing that curve back higher. So I want to see that same situation on inflation where we were sort of dipping going into the beginning of the year. March comes around, we're able to go back in the trend of a more bullish or strong inflation, which is not good for the economy.
Right.
Yeah. But that's it on my end, man. What do you got?
That's it, man. Just let's run it back tomorrow because we got CPI. And
Absolutely.
That'll be a fun episode.
Absolutely. Guys, smash that like and subscribe in the lab. Thank you for being here. We'll see you all tomorrow.
Thanks a lot.
Absolutely. Guys, have a great day. Trade safely, manage your trades correctly, and make sure you use market, especially for those headlines today and going forward with the escalations still rising.
Yeah.
All right. Take care, everybody. Peace.